credit note in GST and its implication in terms of tax adjustment in the hands of supplier and recipient to reverse credit pertaining to the credit note issued by the supplier under GST. In a recent case, in one of the case in Madras High Court, in the case of 𝗱𝗆𝗀𝗃 Private Limited, issue was this supplier has not correctly reported the credit note in its GSTR1, being supplier. Quite obvious, being supplier, you have to report the credit note issued in GSTR1. Table 9 you'd be recalling. So credit note adjustment or adjustment with your outward supply, taxable outward supply, table 9 of GSTR1. And correspondingly, the net effect of this will auto-populated in table 3(1)(a) of GSTR3B. So net of adjustment figure will auto-populated in GSTR3B. But what happened? He has incorrectly not shown in GSTR1, and thereby nothing like net of adjustment was auto-populated in 3B, but to the extent of tax component on credit note which was available to him, he has availed the same as a credit in table 4A(5) of GSTR3B. Avail the credit. And this is not matching with GSTR2A of this particular supplier. Quite obvious it will not, because 2A is going to be auto-populated from GSTR1 of your supplier. Now in this case, it was responsibility of supplier to show credit note in GSTR1. Net effect of the same gets auto-populated in GSTR3B. So thereby tax component on credit note get adjusted with the outward tax liability as a net off in GSTR3B. This is what the provision should be, but he did not do that. He has availed that credit to the extent of tax component on credit note in 3B, and which was not matching with GSTR2A, and thereby this demand and assessment order is being passed against the petitioner, and he has filed a writ petition before Honorable Madras High Court. What happened thereafter? The challenge which we are finding for this transaction in the trade is, and which is interesting and we must know about it, that for supplier first challenge, I will tell you that Honorable Madras High Court has quashed this assessment order, remanded back for fresh consideration, because it's a revenue neutral transaction. Why revenue neutral transaction? For simple reason, the tax component on credit note is available to this petitioner, which is available for adjustment with his outward tax component liability. But instead of getting it adjusted, he has taken credit to that equivalent amount, revenue neutral. But assessment order is being passed early years 17-18, when GST was new law, nothing was clear on public domain, a lot of confusion. Honorable Madras High Court has heard that and given the relief to the petitioner that okay, you go back and file your fresh supply again and let department listen to you. This was the judgment. But what is interesting for this subject matter is, even today, and a lot of you will agree, and you can write back in a comment box as well, if supplier is correctly showing this credit note in table 9 of GSTR1, let's assume correctly showing, but let's say the credit note in a particular tax period, the tax effect on that credit note in a particular tax period is much higher. It is higher than the available tax liability for that tax period. So GSTR1 will take the negative value. But when it gets auto-populated in 3B, it becomes automatically nil. So 3B is not taking negative balance. For simple understanding, let's say credit note tax component 18 rupees, but in that particular period you are having only 10 rupees outward supply and 1.8 your outward tax liability. So quite obvious, tax adjustment which you require for the credit note is much higher. So negative will come in GSTR1, but this negative will not flow in 3B. So what you will do? Your 3B would be showing only nil. And as per advisory, they want it should be adjusted in subsequent tax period. To what extent, how many period, these are all subjective questions. GST law got implemented from July 17. We are in the month of April 24. Still, this negative impact is not being picked up in 3B when we are talking about credit note in the hands of supplier. But what happened? Instead of getting it adjusted, because it is not picking up negative balance, you take corresponding credit in 3B, which is equivalent of that tax component, which is available to you as an adjustment. So it is revenue neutral transaction. So a lot of so-called notices are being issued, but revenue neutral. Why demand should be? It's a revenue neutral, quite evident. He has shown in GSTR1, negative is coming in 1. 3B he could not because it is not picking up negative balance. But recently, January 23 onwards, table 4A5 is showing the negative balance for the credit. So it is only when your recipient and your supplier is issuing a credit note, and he is showing in a GSTR1 so that it is getting auto-populated in 2A, and in case it is negative, then it is coming in table 4A5 of the recipient. So this understanding, I'm clear that you must be understanding. The supplier is still having problem. No negative balance is being picked up in 3B. First issue, second issue. The two judgment from Rajasthan High Court, Tata Motors Limited and HUL, in both the cases, issue was department is disputing the tax adjustment on credit note in the hands of supplier, that you will not get adjustment. Why you will not get adjustment? Because whether your recipient has reversed credit pertaining to this credit note issued by the supplier under section 15 subsection 3 clause B, you must be recalling, recipient need to reverse corresponding ITC. But as a supplier, what is the mechanism available to which today? Of course, they have developed. And January 2023, which we are referring, they have developed. It is now coming. Now it is coming in 3B. But what happened for the past period when there was no mechanism available? How being a supplier issuing credit note under GST and adjusting with my outward tax liability will ensure that recipient has reverse credit? No mechanism was available. It is only made available only from January 2023 onwards. So for past period, department is issuing so-called notice and confirming, no, you will not get adjustment, pay up this liability. And not only liability, interest and penalty. Two cases back to back in Rajasthan High Court. HUL and Tata Motors. So credit note in GST, lot of dispute and confusion. I have also created another video which is on financial credit note versus credit note in GST, explaining this concept, which is given as a link in the description box, which you can check for understanding the broader concept of credit note in GST versus financial credit note, which is not under GST. What is the implication and how it is being done? What are the adjustments available? For understanding that concept, you can go back to this link, which is given in the description box. Thanks for watching. Stay tuned. Many on GST to make GST good and simple tax. Thank you very much.